Welcome to my weekend market recap, 2nd March 2024. I'm very happy to see you here today. On one of the road trips in Thailand, I was traveling from the hill station of Phurua to another hill station of Chiang Mai. On the way, I noticed the gateways to this temple. This is not the gateways. This is the temple on the top of a small hill. So I drove up the hill from the gate to find this temple. From outside, it looked like a modest temple, little bit old temple because the newer modern Thai temples they are plastered outside, not with bare brick. So I found this temple looked like a modest temple with nicely maintained garden outside. When I walked closer to the temple, I found intricate designs, artwork on the metal metal windows of the temple. So from the external view, I looked closer, and then as I went even closer and looked at the true internals of the temple, I saw how grand it was, beautifully colored in gold and red, with series of columns leading to the Buddha at the back. In trading, just like when looking at this temple, we get a true sense, the complete picture of the market, of the object we are looking at by looking at the object from different angles. We first step back, look at it from a distance, then we look closer and closer, and finally we look at the internals to see how the object or the market really is. And that is exactly what I do in trading as well. I'll demonstrate the exact same technique of looking at different levels in today's webinar as well. Greetings, I am Sagar Nandi, retired IT professional, swing trading stocks for a living in the USA market as well as the India market using the only one trading system that I developed, Q system. I make these weekly videos on my YouTube channel, and I also share live market and stock analysis on my website and X handle Superior Profit. You may contact me using my email IDs info@superiorprofit.co or tradingprofitably@gmail.com. These are the systems I use, components of Q systems. They run on Metastock as well as TradeStation for technical analysis, and I will be using many of these systems, and I'll be using both of these platforms today. Disclaimer, this demonstration is for educational purposes only. I am not an investment advisor. It is not a trade recommendation. Trading involves risk. You and only you are solely responsible for the outcome of your trades. Options trading can be risky. It does not have to be, but it can be. You may refer to the characteristics and risks of standardized options document from OCC to decide if options trading is suitable for you. That was the last slide. Let's continue with the live systems. First, a look at the dollar index. Dollar tends to have an impact on the market, especially the USA market. This is dollar index. In the last market recap, looking at the bullish indecision cluster at the low, I hypothesized that dollar would go up from here, more likely than coming down. It didn't go up really, maybe very little bit it went up. On Thursday, it looked bullish with a bullish flow. However, on Friday, it pulled back. It is holding on to the trend line support. It is inside a triangle in daily, and it is closer to the support than to the resistance. At the same time, weekly is at resistance. The support is far away. Last week, looking at the indecisions, I thought price may go up rather than down. Now, I am not going to make any such hypothesis. I'll wait to see whether it breaks down below the trend line support, which will be bearish for dollar, bullish for the market, or if it goes up and it has to break out of the trend line resistance now for dollar to be bullish, which will also mean it will break out of the weekly trend line resistance. That will be even more bullish, and that may be bearish for the market. Right now, I will hold my observation on dollar index, see where it goes next. I mentioned about looking at the market or looking at the temple from a distance. That is achieved by looking at the longer term interval. The distance in the picture is equivalent to looking at the market from a longer term interval, not only in terms of technical analysis, but also in terms of sector industry rotation analysis and even fundamental analysis. Looking at the window, the detailed intricate design of the window is equivalent to looking at the signals, individual signals in daily. That is the trading interval for swing trading. And looking at the internals is equivalent to looking at the market breadth and looking at the sector industry stock breadth as well. I will show those as well. So dollar index is moving sideways for this week. If we again look at the details, like looking at the intricate design on the window pane in the temple, looking at the details, not missing anything, we see weekly is actually a doji candle. That is very indecisive. That is in sync with my decision not to make any prediction or hypothesis on dollar index now. It is very indecisive. I'll have to wait to see what it does before deciding on it. Now let's look at the external view. Not of dollar index, but of the market. Let's look at the market ETFs for that. SPY, S&P 500 ETF, shooting up like a rocket. If we didn't know that this is SPY from the ticker symbol in the charts, we could as well think it is a high growth stock shooting up. It is not a high growth stock. It is an average of 500 large companies in the USA, but it is acting like a high growth stock in terms of how fast and how far it has gone in the weekly period without any significant pullback. And that rocket like move is also evident in daily. It once again made a new all-time high in both weekly daily, closed at a very high price level. That is an external view. Now let's look at the intricate details of the window. It is at jump high but not thrust high yet. It is at price extreme high, but it can stay at price extreme high for a long time. That is usual, nothing uncommon about it. In terms of jump thrust, if it hits thrust high as well, if another green dot comes here, cyan dot, bright green dot, then we may start to anticipate a pullback. Now, Does it mean that it will be overbought enough to take short trades? No, that is not the Q technique. As I mentioned in the last market recap also, and the one before that, probably the one before that, I'll be ready to start shorting only after the trend line supports are broken. I will not need it to be in a downtrend with lower high, lower low, but I will need at least the immediate trend line supports to be broken, and there are similar trend line supports in many other external views as well as internal views of the market. Unless though they are broken, at least some of them are broken, I am not going to look for shorts in general. So it is very bullish. SPY itself is too extended above the upper boundary for me to buy, but it is looking very robust strength. Again, jump thrust is not at high yet, not both of them together, so it may go up more. But I will not buy SPY itself in my own approach. What about QQQ? Technology stocks are the winners, isn't it? But notice in the long term view, it's probably as strong as SPY, if not little bit less, because I noticed there was one candle in the middle which was in magenta color, bearish color in the weekly chart. But if I go back to SPY for a moment, SPY did not have any magenta color. Therefore, though both of them made new all-time highs this week, back to QQQ, both of them are robustly going up. Over this entire period, QQQ might not be as strong as SPY, but both of them are very strong. Again, QQQ is not as strong as SPY. Overall, can be seen from jump thrust. Here, none of the signals have fired, whereas for SPY, we saw jump was overbought. Here, none of them are overbought. Therefore, though QQQ is extended, I will not buy it today. Here, already at upper boundary, stretch is extended, and price extreme high can be extended for a long time. That was not a reason not to buy, but the stretch extension and price being already at upper boundary will prevent me from buying QQQ for swing trading now. But it is very bullish, and I will need to wait before thinking of shorting. There is no weakness signal yet, not enough to consider shorting. Not only QQQ, probably not even constituent stocks. Next, industrials ETF DIA. See how when we take a step back and look at the weekly chart, we immediately get to know something. Yes, it is also very strong, just shy of making new all-time high this week. This week's close could not, Friday's close practically didn't close above the previous watermark high, so it did not make a new all-time high on Friday, but it is very bullish as well. That is what we know from news, from our own study. But when we look at the weekly chart, take a step back, we see internally it is even weaker than QQQ. So SPY looks strongest in weekly, then QQQ, then DIA. DIA has a series of yellow neutral candles that we did not see in SPY, that we didn't see in QQQ. Here, the daily trend line support is not very far from Friday's close. So if it comes down, and that's a big if, then DIA may give shorting opportunities first. I don't like to short the ETFs themselves. I could instantly, in real time, drill down into constituent stocks using Q index, look for the weak industrial stock with weak fundamentals, weak industry score, industrials with weak industry score, then look to short those individual stocks. The relative performance is also showing that it is underperforming. That is aligned with my observation that if the market falls, if these trend line supports are broken, we may have industrial stock shorting opportunities first. When the opportunities come, we'll know them in real time using QFinder. So SPY strongest looking when we take a step back, then QQQ, then DIA, and let's look at IWM. IWM for a number of weeks was very weak, relatively speaking. Not that it had a large pullback, it was moving in a range. The range was created by yellow direction line, watermark support. Now it has trend line support at the bottom, and at the top it had watermark resistance. That watermark resistance is broken now on Friday. Friday it made a new high, new local high, not new all-time high by any means. I zoomed out. Not a new all-time high by any means, but at least broke out of these two consolidation areas, a wider rectangle area, and then it took out the recent watermark high. That is bullish. And if you are watching the market like I am doing, we can see rotation from one category of stocks to another. That is quite common in the market, and it will not be surprising to see that the small cap stocks starting to go up now. And if that happens, then we'll have plenty of buying opportunities in small cap stocks because they were languishing, some of them, and many of them were underperforming the overall market. We may keep an eye on them. Can we short IWM if the market falls? Unlikely, because there is one trend line support, but if that is broken, there will be another trend line support not far away. The ascending yellow direction line will also act as a support, so we will not be able to short easily even if IWM comes down right now. So looking at the four market ETFs, external view, taking a step back using weekly chart and looking at the details, the daily signals, my conclusion is if the market falls, industrial stocks, DIA constituents may give shorting opportunities first. And looking at how IWM is behaving, I will not mind looking at small cap buy candidates in the coming week. That is taking a step back and looking at the details. Now let's look at the market internals to complete the market's picture. Dollar index, a custom index in Q Global Market Breadth. I don't have time to share all the Q insights in every market recap. I don't share it every week, but I thought I would share it this week because the custom global index that includes all the major markets except USA global market is also very strong now, and it made a new all-time high in fact this week. Friday it had a very bullish shape candle, has a flow long setup, and it broke out of the congestion area. That is looking bullish. So global market is looking bullish. Again, looking at the details, we have big move up 3. When big move up 3 happens, it may mean two things. It may mean huge bullish buying. That is of course true. Huge buying on this day in the global market. What we have to see that does it pull back immediately. Then that buying could be under the hood, in fact, selling by professionals, buying by amateurs. But if it does not pull back, instead it continues to go up, that will mean that the bigger players are starting to buy again after this congestion period. Prior to that, after this congestion period. So one congestion period was broken here, consolidation again, and on Friday we have a breakout. We have to see if it turns out to be a false breakout or if it is continuation of a rally. As of now, it is looking quite bullish. And I also say that, again, taking a step back, is because the weekly trend line support is holding extremely well. That is why I take, and all Q traders take these trend lines, memory trend lines, very seriously. That is why I mentioned that unless some of these are broken, at least some, I'm not going to look for shorts. And I see strong trend line support in weekly, daily, both in the global market, global custom index as well. How about America's market internals using the extremely useful single chart market breadth total view? Now we are looking at the internals, looking at the temple inside to decide how it is finally. First thing that catches my eyes is the Bango that came on Friday. Friday was very bullish in the market. We saw that from the external view of SPY, QQQ, DIA, even IWM. That was bullish, but Bango is saying it's not only bullish, it is also irrational exuberance, buying of everything. That is something to be noted. And we already had Hindenburg cluster earlier, Bango earlier, in fact Bango here also. In the latest version of Q Global Market Breadth, we have three colors for Hindenburg. One is yellow, that is Hindenburg warning. One is magenta, that is confirmed Hindenburg. And then we have cyan, which is confirmed Hindenburg with Bango. So we can see Bango and Hindenburg confirmation cluster continuing. We have another Bango on Friday. And this is a consolidated view of Nasdaq, NYSE both. If we want to know where the Hindenburgs are firing in NYSE, NYSE or Nasdaq, where the Bangos are firing, I need only one more click to look at the market breadth of those two major components, Nasdaq and NYSE. We can see the Bango on Friday fired on NYSE. Earlier we had confirmed Hindenburg in both Nasdaq and NYSE. So I have those in the back of my mind. For a couple of weeks I was reluctant to share buying ideas that were not in defensive areas. But this week I did share one buying idea finally, which was a non-defensive stock. Why not we look at that stock first? I share such buying ideas always before knowing the results on my website's forum page and also on my Twitter page. So I shared one idea on forum and provided the link here on Twitter. Let's look at the forum and you will see why I shared this stock idea under the stock ideas category, my reluctant buy idea. And I explained it in detail why I was reluctant. I explained that in several market recaps because market was overbought and this is a non-defensive stock. The stock ticker is Caesars, CZR, Caesars, casino company. Why did I share it? I shared the real time snapshots for that. Casinos and gaming industry was one of the strongest. You know that from the checkered background of the score and also from the color, but top 20% is indicated by the checkered background. So top 20% in score on that day in real time and also top 20% in acceleration. We can see from the heat map, the industry was weak earlier, now getting into strength, so much that it is top 20% in score and getting into that strength with acceleration. That's a turnaround candidate in terms of industry. Remember, I mentioned about taking a step back, that is looking at the longer term score of the industry, then honing in into the recent periods of 5 day, 2 day, 1 day, and then even in real time to get closer and closer to the market. This is also an internal view because we are not just looking at market ETFs, market futures, looking at how the industries are doing. The industry was up by 2.2% on that day, a huge gain. So industry was a turnaround candidate, up industry, accelerating industry, one of the strongest. That was a clear buying place to look for stocks. Well, I found this stock, Caesars. I introduced box stocks in Q systems in the last week of February, just 1 week ago. It was created, the concept of box stocks, that is categorizing stocks into 10 boxes, 1 to 10. This scheme was created by Mr. Ian Woodward, may him rest in peace. Now we are able to see the box categorization of stocks in real time, not only for stocks in the USA market but for global markets, and I'll come to this second part of global markets shortly, come back to that shortly. So I found instantly a box stock. Box stocks have a known history of outperforming the market, not only when the market is turning from bearish market to breakout to bullish, but even in any market, box stocks have a tendency to outperform. So whenever I see a box stock, I am more interested in buying. And we also have in Q the categorization of 3-star, an undervalued stock with high growth. So this is not only a box stock, it is a Q 3-star buying candidate. Insiders are buying, short squeeze potential. Those stocks may move a lot. So if we combine the 3-star buy candidate, box categorization, insiders are bullish, has a short squeeze, this is a good stock to buy in terms of fundamentals. And we saw relatively the industry was strong. We can also see in itself the industry was very strong. 100% of peer stocks were up on that. That's an industry to buy. And remember, from the industry scorecard, taking a step back and then looking at the recent detail, we saw it is a turnaround industry. So industry says go look for buying. I looked at stocks in the industry. I found Caesars. Fundamentals are telling go now look for possible buy setup technically. And this is what I saw in technicals. See how different angles of the same thing, same stock is coming together. Again, taking a step back, weekly chart has a very long-term support from a memory trend line coming from, as Shrek would say, far, far, far away. Created a false downside breakout, stopped right at the trend line support, and then backdrop turned bullish. What did we have one candle before? We had an indecisive candle with bullish indecision at the bottom. What pattern do we have in weekly now? If we combine the last two candles, multiple patterns. One is a flipping from bearishness to bullishness in terms of color, and another is a bullish candle followed by an indecisive candle. Taken together, those colors, those patterns are bullish. At the same time, in daily, now coming closer to the temple, looking at the individual signals in the recent period, we again have a false downside breakout, and I checked from Refinitiv, the earnings came out in this area. If you can see, this candle had a huge gap down open but closed sharply higher with a bull release signal. That was the time when earnings was announced, the gap down could be related to earnings, moved sideways for a while, and right on this day when I shared it, it broke out of the triangle pattern in daily with a bullish flow, and it was coming out of price extreme low, that is a lucrative buy point. So technically it had enough reasons to buy. Earnings is already over, so I thought of buying the stock, and I already took a position in the stock using stocks. Was it all that I saw? No, I looked at one more thing, maybe two more things. Why one? Let's look at two more things. Why not? Now, before going to the two more things, when we read the chart signals for a period, we get to know everything from the chart itself. But if you are beginning with Q systems, you could always look at the commentary, which is a program, in fact, that reads out the chart exactly as I would, or any experienced Q traders would. We saw from the commentary on that day that it had a breakout long setup, but it also had a price extreme low pattern. I already mentioned that from the chart. One thing I did not mention from the chart, but I catch it from the commentary, is that it also had a bullish fan out pattern. What is fan out? When multiple direction lines come together, converge, and then they diverge again from downtrend to uptrend, that is a bullish fan out pattern. So that pattern was also there. Looking at the details, let's look at two more things. In the Q systems, we also have additional momentum signals, AGSI like signals. What did we see from those additional momentum signals? We had a breakout setup, but we had now many more momentum signals. What are they? PSAR reversal. Any bullish signal is green. So PSAR reversal, MOBO breakout with a kahuna from a squeeze with a bullish bongo. How many green dots? 1, 2, 3, if we consider bongo as a dot, or the ribbon as a dot, which is also bongo. 4 green dots from a squeeze. That is a strong bullish momentum with a proper breakout buy setup. So technically we had even more reasons to buy. Whenever we have 3 green dots, that is enough to consider buying. Of course, this is momentum signal. My setups are actually from Q system. So we have a breakout setup, and I am getting more confirmation from the momentums. That was not all, right? I said two more things. Other than the momentum signals, I also looked at seasonality. We just started March. April is 1 month away. January, February, March has neither bullish nor bearish seasonality. The first month of the year that has significant seasonality directionality is April, and that's a bullish seasonality with 78% of the times it went up. Anything near 80% is actionable. So we have April bullish seasonality, and average when up in April is 20% up move, but that is average when up. If we look back in 2015, we had a 40% up move in April, and in 2020 we had a 48, almost 49% up move in April. So April has very strong bullish seasonality. Only 2 years it went down. That makes a seasonality score of 78%. Seasonality is also telling that it favors buying the stock now, and that is a complete view of the stock, looking at its industry rotation, looking at its fundamentals, looking at its technicals, further looking at the momentum signals, and ending with seasonality. It is rare to find all those things, including seasonality, aligned at the same time in a box stock and 3-star buy candidate in a turnaround industry. And that is why, though I was reluctant for a while to buy and therefore share, non-defensive stocks, I made a reluctant sharing of this stock idea. We'll see how it goes. After I shared the idea, how did the stock move? Let's look at that. This is Caesars as of today, CZR. Weekly support is holding. I shared the idea on Thursday using a breakout setup. On Friday, price came down little bit but closed with a bullish shape candle. I will say it's a bullish shape candle and it is acting well. Now I also want to mention whether it comes down, goes below the trend line support and stops me out, or it goes up, breaks the trend line resistance, continues to go up into the bullish seasonality month of April, does not have any bearing on my classifying the trade entry as a category entry or not, A being the best category. It will always be a category entry irrespective of the outcome of the trade, because outcome of a trade we never know, we don't control that, but we control how we choose our stocks for entry, when we enter them, how timely we are in entering. In all those aspects, this is a category entry. Result is different from a trading system and technique, and I think I found a very good buy candidate using long-term weekly trend line support and shorter term daily trend line resistance breakout. That is one of the strongest patterns in technical analysis for buying as well. So Caesar was one non-defensive stock that I shared. So you can see, as I am looking at the market, I am aware of the Bango signals. I am looking at the Hindenburg signals. I was not going to buy or suggest any non-defensive stocks for a while, but now I notice some internal rotation happening. Rotation is not only between mega cap to mid cap to large cap to small cap, it can also happen between stocks that were outperforming earlier and then stocks that are underperforming earlier. So I found this stock considering that rotation possibility also in mind. Now let's continue with the market level analysis. Now again, looking at the market internals, continuing with that, I diverted to look at Caesars. Sector industry stock advanced decline. Sector industry stock advanced decline breadth from 1 month period to 1 day period. During market hours, the last column will show us real time sector industry stock breadth. Everything is bullish now. There is no scope of thinking of shorting, and that is aligned with what we saw with so many trend line supports in the external views, the global market index, everything. In fact, if I go back to the market breadth total view and look at it using weekly, daily Q charts, you will once again notice how the weekly as well as daily trend line supports are holding. As I mentioned, unless at least some of them are broken, I have no reason to start shorting stocks. I am watching them. The trend lines are acting as robust support as they almost always do. And this is not any particular index or stock. This is the whole market view using market breadth total view. Okay, let's go back to QH, sector industry stock breadth. It is very bullish, but is it overbought? That answer comes from bucket analysis, when the percentage of stocks in the highest bucket goes to 30 to 40%, and the highest bucket represents stocks above upper Bollinger Band. Stocks in QH, that is S&P 1500 stocks. Now that percentage is far from 30 to 40. So it has more room to go before being overbought. Interestingly, see how things are falling in place. We are looking at the scene, looking at the market from multiple angles. We are taking a step back, weekly interval. We are looking at different aspects in daily interval across technical analysis, sector industry analysis. And we are also looking at different ways to see whether it is overbought or not. When we looked at the external views, we saw jump thrust is not high together for any of the market ETFs. So the jump thrust signal was telling it could go up more. And we see the same conclusion from bucket analysis. It could go up more. What do I mean by it could go up more? Of course, market can anytime go up or come down or move sideways. That's a non-statement in a way. What I mean it could go up more is that in the history, in the past, when it hit 30 to 40% level, it had a tendency to come down, but we have not reached that level yet. What I mean by it can go up more is also that when it hit jump thrust high, it has a tendency to pull back, but it has not hit jump thrust high on the market ETFs yet. So that is why from multiple angles, that time when a pullback is likely has not come yet. And also 66% of stocks are above mid Bollinger Band. That's a bullish picture from bucket analysis. Once again, bullish but not overbought. Finally, we look at technical breadth, a very important part of trading profitably. Finally, we make money buying stocks only if the stock goes up. So technical analysis is very important, and we have an excellent way of looking at technical breadth. Again, take a step back first, look at the weekly interval from Q Finder. All signals bullish, strength bullish. I'm just looking at color coding. Trend continuation bullish. Reversal is more bearish than bullish, but absolute number of reversals are not much. There is no alert from bearish headwind. So the weekly technical breadth is bullish. And daily technical breadth is of course bullish across all categories. No overbought signal from red candle high. No overbought signal from jump thrust high. No reversal alert from headwinds, neither in weekly nor in daily. Is there anything in this diagram that is telling it is approaching overbought level? Yes. It is not from red candle high, it's not from jump thrust high, it's not from headwinds, but it is from the percentage of stocks that are giving bullish setups. Where are they coming from? If majority of them, more than 50%, comes from price extreme high, price level that is getting overbought. Sometimes I mentioned it earlier, there are things in this technical breadth that gives me additional alerts that may not be available from other angles, and this is that situation once again where I see bucket analysis is not overbought, jump thrust not overbought, but the percentage of stocks giving bullish signals from price extreme high has hit the threshold of 50%. That's something to keep in mind. Again, rotation may be going on. So there are stocks that are coming up and giving bullish setup from price extreme low, many more from price extreme middle. So we may be, I am at least comfortable buying those stocks as I did for Scissors. And Scissors, you noticed, was from price extreme low, just coming out from price extreme low. That is the lucrative buying area for me. These are little bit extended, can still be bought with proper setups, but I love to buy strong fundamental stocks, box stocks, 3-star buy candidates, short squeeze potential, insiders buying when they are at price extreme low. Hope to quickly book profit on partial position once the risk distance is covered and hold the remaining position with a stop to let the profit run. Overall, I am of the view that market has some overbought signature from Hindenburg Bango, but we can buy, and I started buying non-defensive stocks again. One I shared Caesars. Now let's also look at one stock only that I shared earlier, a defensive stock, MO. And what do I mean by defensive stock? One is a consumer staples category. Smoking can be staples, isn't it? I always wonder. Smoking is actually consumer staples, MO, Altria, MO ticker symbol, Altria is a tobacco company. It's actually a consumer staples, and education is consumer discretionary. Nice, isn't it? In any case, consumer staples is a good category for investment. I don't smoke, but for investment, consumer staples is a defensive category, and this is also defensive because it pays a huge dividend of 9.6%. It has nice valuation, very strong earnings quality, short squeeze potential. Again, insiders are buying. So short squeeze with insiders buying, nice valuation, strong earnings quality, high dividend yield. When you combine them together, it's a candidate to be held longer term, not necessarily a short term trading. And that is exactly what I mentioned when I bought the stock. Publicly mentioned that in the YouTube video at that time, that I don't plan to stop out on this stock. The dividend yield, the earnings quality means across earnings, it is expected to give consistent, stable returns. Not that one quarter it will be very high, one quarter very low. That's also characteristics in general of consumer staple stocks. But this stock itself, not only about the sector, this stock itself has robust earnings quality. So I decided to buy and hold the stock. Let's look at AMO. This is a long-term holding for me. I'm not going to sell now. I don't remember when I bought it, but somewhere in this area, it is remaining inside the triangle pattern. I think there was a breakout here. Let's look at the historical trend line chart. Yes, I think I shared the idea and I bought the stock on this day. Remember this long bullish candle? That was the day when I shared it. That was a breakout in daily. Let's go back to the at a glance weekly daily. Notice that pattern that I found in Caesars. Long term, taking a step back, weekly trend line support, and at that time a daily trend line resistance breakout. That is one of the strongest patterns in technical analysis. So I bought it. If one was to stop out, stop would be below the trend line support, but stop has not come out. But I did not buy it thinking I'll stop out because it has very high dividend yield and I'm expecting it to go up. Anyway, the dividend yield, again I'm repeating, the dividend yield is enough for me to buy it long term, but I'm saying if it goes to the white direction line which is declining, then I'll have a reasonable profit in terms of percentage in the stock. I will consider closing partial position and applying trailing stop on the remaining position. So by that, I'll make the trade risk free. I can focus on other trades. I don't have to count it as an active trade anymore. See, consumer staple stocks, I don't suspect it will suddenly hugely gap down barring some accounting issue, but consumer staple stocks, unlike growth stocks, don't suddenly jump up and down. So once it hits my initial profit target, I am perfectly comfortable booking partial profit and applying trailing stop on the remaining one below recent swing low. Not hugging the price, but below recent swing low at that time. Just leave the remaining position there and see what, Sagar. See if it can go from price extreme low all the way up to when this turns into price extreme high. That is what I am aiming for both in MO, Altria Also in Caesars, I'm buying at price extreme low, trying to book partial profit if I get a chance to do that quickly, and then holding the remaining position all the way from price extreme low to price extreme high, combining short-term trading with long-term trading. However, MO was never a long-term trading, never a short-term trading for me right from the entry point, as I decided upfront. So I am continuing to hold MO as a defensive stock. And it is not the only defensive stock I bought. I'm holding several, and I was not buying, I was not sharing non-defensive stocks. I made an exception on Caesars. Now I am also lucky to be talking to several great traders from time to time, and they give me ideas. I don't take their names. They are using Q systems. They are probably using many other systems also. Great people also, not only great traders. And one of the gentlemen mentioned me about investing in non-USA market. India specifically. India is one of the fastest growing markets among the bigger economies. Let's say if we take the world's top 5 economies, India is the fastest growing in terms of GDP growth. But remember, though it is one of the top 5 economies in the world, it is very, very small compared to USA and China. And closer to, probably reaching closer to Japan, reaching closer to Germany, but very far behind America and also China. What does it mean? That also means that it has potential to grow. When a country's economy grows at the rate like India's economy is growing from a low base like it is now compared to both China and America by a huge margin, in fact, the GDP is still much lower than both those countries, world's number one, number two largest economies. So if we think that it has room to grow from a lower base, current GDP growth rate is high, we could look at stocks to buy, or we could look at funds to buy. Why I say funds? Because I don't like to buy funds, but it is not easy for foreigners to invest in Indian market directly. They may opt for mutual funds or funds that track the overall market. And I mentioned to the gentleman that one safe bet, if he is investing in the Indian market, could be to do a systematic investment plan, equal amount money going into a mutual fund. I don't know if that exists or not. A mutual fund that tracks the Nifty 50 index, which is also hitting all-time high now. It's at all-time high now. So this is Nifty 50. But then I also thought that, something interesting. India has many of the global companies listed in India. Is Unilever, I think, is a global company, isn't it? And we have Hindustan Unilever listed in India, conservative stock. So a global company is listed in India. I actually like this chart. Hindustan Unilever, Unilever company listed in Indian market for the local business, I guess. Why I liked, and you see how the same analysis can be applied to any stock in any country so long as they are liquid. What I noticed, okay, let's look at it as in weekly daily. I'm diverting a bit on how to use Q to invest in global stocks. Not necessarily only India stock, but global stocks. I'm using some Indian stocks as example to explain different ways to use Q systems. Well, Hindustan Unilever, a global company listed in the Indian market, hit jump thrust low, hit price extreme low. All of a sudden came big move up 3. I am watching the stock from that time. Came to the watermark support created by whom? Created by the big move up 3. Came to that watermark support, created a false downside breakout. What did we have at the false downside breakout? A large cluster of bullish indecision. I am watching the stock from that time. And then I think I bought the stock on this day when we had bullish flow using this pattern, and at the same time taking a step back again, like in the temple picture. I am watching the weekly. One low, second low, you could say third low, fourth low, fifth low, and maybe a sixth low. 6 times price has failed to go below this level. So somebody, bigger players, are thinking that this price level is good to support the stock. So I piggybacked on them and I took a long position in Hindustan Unilever. Now this is a global stock listed in the India market, but there are some large Indian companies listed in USA market. That's what I was going to come to next. If a country's economy is growing, one safe bet for longer term is to invest in the strongest banks in that industry. What is the largest bank in India? That is actually listed in the USA market also. Of course, it's listed in the Indian exchange. It's also listed in USA exchange, and the ticker symbol for the USA exchange is HDB, HDFC Bank. I think it is one of the top 5 global banks. No, sorry, not top 5. I will not say that. One of the largest global banks, but it's the largest Indian privately controlled bank, not a government controlled bank. And I am seeing again signals looking at the intricate design on the window. Bullish cluster in the weekly, also taking a step back longer term. In daily, looking at the details, near jump thrust low, big move down 3, rapid big move down 3, and then price seems to be stabilizing here. There is a trend line resistance. If that is broken after this indecisive shape candle of Friday, that may be a time one could consider buying the stock. So one way to invest in global markets is to use that country's mutual funds or funds tracking the index, or to look for their stocks listed in the USA market, and HDB is one such stock. Now, how to use Q systems to your advantage? Let's do a peer analysis of HDB, and you will see the power of the Q systems when properly used. If I look at HDB's peer analysis, something will come to notice. Several things, in fact. I am at 1 hour point, but allow me a few more minutes. I think this discussion is important, valuable for people who are thinking of investing in global markets, not only USA, not only India market, but any global market. Is retrieving data from Refinitiv for HDB, the largest privately controlled, meaning listed, not government bank in Indian market. HDB. Okay. When I am doing the peer analysis of the ticker HDB, I wanted to show one thing, and that has to be corrected. Once we see something here, I'll explain what I mean. That view has to be corrected and how we do that using Q systems. Give it a few more seconds to retrieve data from Refinitiv, please. Sometimes when I'm running these weekend webinars, the system Refinitiv is slower than usual. My system, Q systems, is same efficient as always, but retrieving the data over the internet is sometimes slow during the weekend, more so like say, like a conspiracy theory during my webinars. But no problem. If it is taking too long, let me pause and send the request once more to Refinitiv, see if it wakes up, becomes more responsive. Okay, sending the request again to Refinitiv help. One thing I wanted to point out, and that is very valuable for investing with the 360 degrees approach. HDB as a bank, I think it's a solid bank if somebody is investing in India's economy. It's the largest bank in India. But notice when you look at the percentage of peer stocks on Friday, majority of them are down. Now, if I look at the industry scorecard from QH, it's not looking attractive. That may tell one not to buy the stock, and that is the angle I wanted to correct, because we are looking at HDB's peers in the USA market, but HDB is not an US bank, it's an Indian market bank. To get the true picture of its industry, we need to look at its Indian ticker symbol, and that will be HDBK.NS. That will show the true strength of the industry and true strength of the peers. Give it a few seconds again. It will retrieve data from the Indian exchange now, and that's why these systems are global. Q Global, that's why it's called global, and Q Dives all can be used in global markets. Only TradeStation is limited to USA market. That is QL. Okay, when I looked at HDBK, that time it was very strong. I'm not able to show one more thing. I'm not showing it actually, because if I go to QH, I change the industry to India, it will recalculate the sector industry stock scorecard and the rotation for the Indian market. And if you did that, you would notice that the Indian banks are much stronger at present than USA market, and in USA market might have been affected by this huge drop in NYCB, New York Bank Corp, which had a huge drop, 24% drop after announcing some material weakness in something they found. So that led to a huge drop in the stock that affected the market. The stock was weak in the long term, taking a step back, but Indian stocks are not looking like that. Now, another thing I wanted to show, I didn't want to stop there. See, I started with HDFC Bank. Why? Because that is the largest bank in India. One could look at that. But if I now go to peer stocks, notice one thing I mentioned, the box stocks are available in global markets as well. And we have two box stocks. Box stocks tend to outperform in the longer run, so it is worth looking at them, isn't it? We have all the facilities available. By the way, out of them, I don't know, this KTKM is Kotak Mahindra. I don't know if it is listed in USA, but ICBK is listed in USA also. Let's look at the Indian chart using the Indian exchange ticker symbol ICBK.NS. NS for National Stock Exchange India. That's a very strong stock. The other stock I showed, I think HDBK is also viable, but this is of course more like a growth stock, more like a box stock breaking out to new recent high, not all time high, coming out of the congestion. Now, if I look at it using weekly daily, this is looking like a box stock, isn't it? Breaking out. And if I look at the USA ticker symbol, we could do it here also. IBN, the same stock listed in the USA market. Rescale also very bullish, just like you would expect from a box stock. And notice one thing, when you are looking at the ADR listed in the USA market, it tends to gap up. at open or gap down at open. That is very common aspect of many ADRs, because the stocks may move in their parent market, and when the USA market opens, it has tendency to open with gap up or gap down. So this is looking strong. In any way we look at it, it's a box stock. So I wanted to share these concepts that we could use the Q Edge and Q Vital to look at global stocks, not only India, it could be China, it could be Japan, it could be UK market stocks listed in America, but do their proper peer analysis. That is, use the parent ticker symbol to do the proper peer analysis, and also use QH to do the proper industry rotation analysis to find the strongest global stocks that are listed in the USA market. That is a way to get exposure to those global stocks. I am at 1 hour point, I think. So I'm not going to share more stock ideas, but it is looking bullish. I started sharing non-defensive stocks too. I'm holding on to the defensive stocks. If I find more ideas, of course, as usual, I'll share them on my forum and Twitter page. Let me end today's session here. Thanks a lot for attending. I look forward to seeing you in our next session, most likely next weekend. And as these live examples show, as I always say, let's continue to take a step back. Look at the temple from far, come closer, look at the individual signals in daily, then look at the internal health to figure out a preferred trading direction. Then once we figure that out, find the strongest stocks in strongest industries at low risk buy point and click the buy button when we have assessed our risk and size the trade properly. There is no reason not to make some profit doing that. I hope we all do continue to do that. Have a great weekend and thank you again. See you next week. Bye bye.